Um, so I want to start off with something real simple. Um, so let me tell you how I woke up this morning. My phone was ringing off the hook.
This morning.
My phone was ringing out off the hook. And y'all got to remember, I'm gonna tell y'all because my line brothers clearly don't respect my life. I'm on the West Coast, and I know TJ has this problem too. But my phone is ringing off the hook at early in the morning. Early in the morning. I'm like, what is going? Did somebody die? And I see my line brother Cogs has sent me 30 text messages, and Godard jumps in. He's got another line of text messages. I'm like, either somebody died or the market is going crazy. The market went crazy today. The market went crazy today.
But when you wake up to 1,000% gain,
that's something to be excited about.
That's something I want to pay attention to.
Yeah, that's something to be excited about. So the market went crazy today. So the first question I would ask is, did any of you know that?
For sure.
Yeah, that's good.
Yeah, so, I got notifications from Robinhood this morning, today, all throughout the day. I was like, oh, okay.
Yeah. I noticed something happened. I didn't know what was going on, but I was like, okay, it's a lot. It's a lot of activity.
Yeah, it's a lot of activity going on. So, what I've come in the habit of doing every morning, I'll just type in SPY, SPY, or you could do VOO, one or the other. And that'll give you the general overview of what's happening with the market, right? And ideally, we want to see it in green, but sometimes we want to see it in red, right? Sometimes we want to see the market go down because that might give us some opportunity. So we got a couple new folks in the building, which is exciting. I know many brothers already know a couple of these brothers that are here, but as a welcoming ceremony, I want to give a shout out and give some love to those folks. So if you're new to the room, introduce yourself and essentially just share why you're here. So we'll start with you, TJ.
I was just about to start with myself because aces go first.
Exactly.
What's going on, big bros?
That means you short. Short. That's all.
It means you're short, you're not an omega. That's what that means.
Right.
I started in the stocks about 2018. Give me a second, Mama. That's my daughter. Jumped at it too quick, lessons learned. Fell back to kind of really learn how to do it. My boy put me on, and I was just throwing stuff in. I was gambling, essentially. But then I fell back after, you lose a couple, you're gonna be like, wait a minute. So I fell back and really started to learn the game. I hit up, Goddard one time. We had a conversation. We had a screen share. Asked him to teach me some stuff. I'm not currently trading right now. I haven't been for several months actually. I just been using that money. I'm hopefully gonna be a homeowner by the end of the summer. So that's where my money's been tied up in.
There you go.
I've been meaning to hop on here. Either I forget or I have something planned. But there's always something to learn. I'm always open to learn some more stuff. I am by no means an expert at this.
Yeah.
So, I was trying to pick up some knowledge from you guys.
Beautiful. Yeah, man. That's great. Well, welcome. Glad you're here.
Buddy, we can do it on a paper.
Amy, you want to jump in?
Who did you say?
I think he's unmuting himself.
Brother Cook.
Hey, what's going on, everybody?
There you go.
Moment Cook here. Some know me as Mo. Follow Six Deuce. And I've done some followings of trading securities and whatnot, but I've never actually traded stocks in the like. But my ideal purpose to get out of this is to, increase my financial stability, to kind of pass on the wealth to my family and those around me that can help assist with this as well.
There you go. All right. Go ahead, Mia.
Hi, my name is Mia, and I'm here because one, I was invited by my father over there in the corner. And also I just started getting into stocks. I've learned a lot about stocks throughout the years. So I think it's important that I learn as early as possible so I can invest as early as possible and make a lot of money.
There you go.
I'm talking about.
There you go. So, so here's what I wanted to start off with. Man, there's just too much money out here for us not to have any of it. Like, for real. There's just too much. That was kind of like after I woke up and I looked at the market, and I'm gonna like do a deeper dive into my account. And just as a little bit of background information, I don't show you guys my account to brag, because there's clearly people who are doing way better than I am. But I really just show you as like kind of a template for what's possible, and I want you to show what it looks like for money to work for you, right? But I really just want to get you guys to lock onto the idea of like, there's so much money out here, we can get it. It's attainable, and we have access to it. And I'm telling you, even from the conversations that we've had over the last 4 or 5 weeks, you know enough already. You know enough already. I don't want anybody to walk out, even if this is your first day. I guarantee you, when you walk out of here today, you're gonna have, a great first step towards making some decisions and being able to invest. So don't shortchange yourself, and don't shortchange what you already know. You know a lot. You're gonna put yourself in a really good position moving forward. So now that we got some of that out of the way, we're gonna do a little something different later on. I can't wait to break that out. But the first thing I want to do is kind of show you guys a couple things. So let me move this out of the way. So one of the things I looked at today, I always go on Instagram, and these guys, Earn Your Leisure. This was the video I shared with you guys last week for your homework. And these few sentences right here really kind of inspired the message that I just sent you, which is the market is up 1,000 points today. This is the largest 50-day rally in the history of the S&P. The NASDAQ is at an all-time high, while millions are still unemployed. Okay, so let me pause there because I want to add something in the parentheses. Not only are millions unemployed, there's looting, rioting, protesting going on all around the country, and the market does not care.
Nope.
At all. Okay? The game, and that goes on to this next sentence. The game will be played regardless if you participate or not. Get off the sidelines and become educated.
Mm-hmm.
That's literally what we're doing. That's literally what we're doing. There's no excuse for us to not be in the mix. And to further prove to you that there's no excuse, I got a very short video that I want you to check out. Just another reason why there's no excuse for us not to be in the mix. So just, if you were humory, take this 2 minutes and check out this video that I want to share with you. You know about stocks, right?
It's kind of like you own a part of a company.
And so, how long have you been investing so far?
A month or two.
A month or two? And how much have you made in a month or two?
I think I've made $119.
And so, how do you choose your stocks every month?
I choose on which ones have the highest value, or if they're low, but I know they're going to come up again.
So you determine that. There you go.
What is that website called?
Seeking Alpha?
Yeah, Seeking Alpha.
And what do we look at?
I'd look at the 5-year chart thing? Yeah.
And what are you looking for on that graph?
It going up.
Yeah. And if it's going down, are you going to invest in the company?
No, not at all.
So far, what's been your favorite company? Well, what companies did you choose so far?
Chose Zoomies, Monster Energy, EFC, which is basically just Bang, Stickies, and other stuff, Coca-Cola, and Nintendo.
And so far, what's been your worst investment?
Probably Nintendo.
Why do you say that?
It just keeps losing money over and over again. Well, it doesn't make sense because, well, the new Animal Crossing game is doing really good, so why is it losing money?
Yeah. What has been your best investment?
Zoomies.
How do you know that Zoomies has been your best investment?
Because it made me most of the money.
Yeah. What percentage did it go up?
42%.
What about Monster? How much percentage did that go up?
17%.
And what about Vans? How much percentage did that
20%.
go up? What about Coca-Cola?
3%.
Why did you invest in Coca-Cola anyway?
Dividends.
What are dividends?
Every month they pay you 50 cents, like at least.
And you want to get dividends?
Yes.
So you can make money?
Yes.
Investing in stocks is easy, right?
Mm-hmm. Yes.
Anything else you think people should know about stocks?
No.
Okay. Say peace to the people.
Bye.
So, what's your excuse? Right? My son is 9 years old. And he knows less than you do. But yet somehow he has a 42% return on Zoomies. And he chose Zoomies because he's a skateboarder and he likes the store. And so we went to Seeking Alpha. We did exactly what he said. We went and looked at the 5-year chart. We saw that they were going up. We looked at the fundamentals. He was down with it. And that's why he bought it. His investment is better than 75% of the ones I made. He's got 1, 2, 3, 4, 5 stocks, and the only one that's not doing well is Nintendo.
And 3% down is not necessarily.
And 3% down is basically a wash.
That's
What he put in,
take
he's
it
still
even.
in, right? I think that's actually like he's down like $1. Okay, so I really wanted to share those two things with you. The first being, the game will be played regardless if you participate or not. Get off the sidelines and become educated. And so that's what this whole thing is about, is becoming educated. And it doesn't matter if you're 8 years old, 18 years old, or 48 years old. It's never too late to get into the game. Any questions or thoughts before we move forward?
Hey, I'll just say something, and I know I talked about 1,000% today, and I do a different style of investing, right? I'm much more of a trader, so I buy a stock and then sell it pretty much either instantaneously or the next day, or for a couple hours. But here's the thing, and then is right. The whole thing is getting in, right? Getting involved, because think about it this way: stock market, there's really only one direction for it to go, right? It's going to go up. Because unless we have a crash, and I know we'll probably look at this, but if you look at the crash we just had, we pretty much recouped all that loss. We have pretty much recouped 100% of it. So if you bought some stock in in March, when we had the COVID crash, you are at literally 100% of your investment right now. It doesn't really get much easier than that, because you haven't really done anything except for say, okay, here's the money I'm going to spend at the club or spend on these Jordans. Right. And now, now I can go buy 2 pair of Jordans if I wanted to. So that's the mindset. And I, we send in COGS, we'll send texts back and forth all day about kind of what we're doing, because as you start getting into this, if you really enjoy it, you want to start talking more about it. I knew I had turned my son into an investor when he started talking about, I don't want to buy those shoes. I'm going to buy the company. All right, because they let the company pay for the shoes. So all this is great stuff, because this is like O said, there's so much money out here every single day. It's ridiculous, man. It's not even funny. You know, my investment was about $440 yesterday, right before the market closed, and I sold early for over $2,000. If I would have held, I would have been up $5,000 on that $400 investment. And it wasn't hard. It was just knowing what you're looking at, right? And so the thing I'll say about what we're doing here, especially for the new guys, is, you know, again, this is not my regular style of investing, but I'm actually enjoying learning about it because now I know, okay, I can just go do this as well. So it's adding another arrow to the quiver, right? So we start here, and O and I have talked about getting into option stuff later on, but we want you guys to get here, understand what this is about, understand how to put your money somewhere where it actually starts to work for you, and then start adding additional knowledge and additional things that you can accelerate some of that if you wanted to. So that's my speech for the night, man.
There you go. And just really quickly, what Gadar said is right here in front of us. This is the S&P 500. I maxed it out as far as it'll go, but when we're looking at trend lines, all we see is up. There's some dips in here, but when you magnify it out, you don't really even see those dips. If you stay consistent and stay there, it's going to keep on going up. It's going to go on forever. Now, if you want to go specifically what Gadar is talking about, here's where we were, right? Then the Corona started. It was at $333. Corona started, and there are people having heart attacks down here, right? March 23rd. Here we are a month and a half later, and we've almost fully recovered to where we were, which was the highest the stock market had ever been. And we're almost back there in a month and a half, despite the fact there are still 40 million people that don't have jobs, despite the fact that there are riots and looters and all kinds of civil unrest going on, and despite the fact that coronavirus is still here.
And the market's up because only 40 million people don't have jobs.
Right.
Think about that.
Right. So
crazy.
So I wanted to go into the account and go a little deeper and show you guys a few things that I saw this week that I thought would be interesting to you.
I love that day change percentage, man.
Oh yeah, shoot, you and me both. You and me both. I do want you to take a second to ignore this. It could be intimidating. Although I was very excited about this today. But I do actually want you to ignore it, right? Here's what I wanted to show you. I want to show you something. So we have been talking about dividends, right? And I think we were really talking like kind of theoretically about dividends, right? And so I wanted to show you something right here. LTC property, right? You'll notice this quantity number is weird. The quantity looks weird, right? And so what I want to do, I want to go here to history. I'm gonna type in LTC, and then we're gonna visually see what compound interest looks like, right? So now, where's LTC? Okay. It's making it hard. Okay. All right. So where did I buy it at? Looked different last time I looked at it.
It's pulling up everything on you.
Yeah, I just tell you to pull up LTC. I don't need all this other stuff up here. Dang, it's not looking the way
Might be
it's
on
supposed.
another page, man.
Is there another page?
Yeah, it's the next page over there.
Oh, there we go. I think that's what I want.
I saw one. Okay.
Yeah, that's what I want. So look at that. On April 16th, okay? On April 16th, which was just a little about over a month ago, I bought 100 shares for $34.49. Okay? Well, just 100 shares. That's all I bought. As you can see, as we scroll through this, I have not bought any other shares of LTC. I bought no other shares of LTC. None. 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 And then on April 30th, I got dividends. April 30th, LTC paid me $19. But what they did, instead of sending me a check for $19, is they gave me 0.558 shares of LTC property. Okay? 0.558 shares of LTC property. Then the dividends came out again. This dividend must come out monthly. This time they paid me $19.11. Now check this out. Again, first time they paid me $19. The next time they paid me $19.11. Why is that? Well, because instead of having just 100 shares, as I did initially, now I have 100.558 shares. So now when they pay on those shares, instead of paying that just that $19 they did the first time, this time they're paying $19.11. So what's going to happen the next time? The next time that number is going to continue to go up and continue to go up and continue to go up and continue to go up. So much so that when it's all said and done, the cool thing about looking at this is we see that now I actually have gained an entire share. I've gained an entire share and have done nothing. I haven't bought any more shares. I haven't reinvested anything. I've done nothing but just sit here and breathe. And as a result, I've gotten an extra one. And the shares are worth $34. Well, they might be worth more now. Worth $42 now. So I got a free share and spent no money. So as you can imagine, we've talked about this already, about how dividends work. But I actually wanted to be able to show you, because we were just talking about it in theory, right? That when they pay out a dividend, the way that compound interest works is now they're not paying you out at that same number. They're paying you out at a different number because they gave you more shares. You understand? They gave you more shares. So I wanted to bring that to your attention. And the same thing happened here with Wells Fargo. I've not bought any more Wells Fargo shares since I initially bought them, but yet I now have like a third of a share that I've earned by doing absolutely nothing. Okay. The other thing I wanted to share with you guys just happened last night. So last night I was I'm gonna show you guys a stock screener later, because sometimes people ask, like, how do you choose stocks, or where do you find stocks, or like, how do I pick a stock, right? So I'm gonna show you that later. But I had gone through a stock screener, and it spit out a couple stocks for me. And so one of those stocks was U.S. Bancorp. And so I looked at them. I did the fundamental analysis on them. And after doing the fundamental analysis on them, I really liked what I saw. On top of the fact, I liked that they also pay a dividend. So this week, I bought 225 shares of them. I want to say I did that 2 days ago. And in 2 days, I made $342 in 2 days. I've done nothing else but buy them. And when I bought them, what I used, if you guys remember this, and for those of you that are new, I'll share it with you. The number's probably going to be a little different today. But I knew I wanted to buy U.S. Bancorp. We'll look at it real quick. I knew I wanted to buy it because I saw this trend of going up. I backed out because I know they've been around for a while. So I basically seen the trend of going up. I see some crashes that happen, but that's going to happen with banks, right? But I saw a trend that was going up. And then when I did the fundamental analysis, and I'll breeze through this really quick. When I did the fundamental analysis and looked at the data, again, I don't need to see, I can just look at the bars. I don't even have to look at the numbers. I see a graph here that's going up. I see a graph here that's going up. I see another bar graph that's going up. I see revenues going up. I see non-business going up. I see earnings from continuing operations going up. I see net income positive. I see my earnings per share going up, right? And this is, again, we just breezing through this. We're not doing it like we normally do it. I'm just breezing through it. When I go to the balance sheet, I'm just gonna skip all the way to the bottom. I'm not even gonna look at the other stuff. And we're just gonna look straight at the bottom line after all the math is done. Going to the total equity, and I see that bar. I see that's going up. See the equity's going up. That's all I need to see there. Then I go to the cash flow real quick. And I don't need to look at any of this either because I can cheat it and just go net change in cash. And I can see that's going down a little bit, but at the same time, the money that they're holding is still good money, right? And so really quickly, I had done all that and decided to buy them. And then, and then the other part was going here to the dividend because I wanted to determine if it was the right time to buy it in terms of like, is it the right price, right? And if you remember when we talked about for things that have dividends, in order for us to determine that, we're going to use the dividend yield. I'm going to pause it a second because some of you guys might not know what this means. And I'm going to let somebody else explain it. But if this dividend yield is higher than the average, that's how I know I'm getting a good price. Matter of fact, it's almost double than the average. It's by looking at the dividend yield. Anybody else remember how we played out this dividend yield and how we made decisions about purchasing based on the dividend yield? Somebody want to share? All right, James, go ahead. We cold calling today.
So to be honest, I probably would have said what you said is looking at comparing the current dividend yield to the average that was shown. You look at the graph, you see how it's on a trajectory of being either consistent or gradually moving upward. That means that they've been consistently paying out dividends over a long period of time. And that's about all I get.
Yeah, so essentially what this is like the price of the stock. When we see it like steady like this, that means the price of the stock hasn't changed that much. It's pretty much stayed the same over this entire period of time. And then when we see it shoot up like that, that's going to correlate. Here we go. March 15th, right? March 15th. And we see it at its highest about right here, March 23rd. And we see it again high on May 12th, right? So then if I go back to this chart on May 12th, we see it was pretty low right there. It was $32.15. And if we extend it out a little bit more, May 12th, this is where it's at on May 12th. It's down here. It's all the way down here when it was up here, right? So you use that dividend yield as a cheat code to be able to determine, like if you like a stock and you've done the fundamental analysis on it, if you like it, this dividend yield right here is going to give us a cheat code to tell if it's a good price. If this number was around 2.6, 2.7, 2.3, we pretty much know you're getting it at the average price. But if this number right here, that dividend yield number, is bigger than the 4-year average yield number, that's how you know you're getting at a good price. And so that's why I bought so many of them, because I knew I was getting at a good price. Okay? And in the 2 days that I had it, it went up 3.73% and made $342. When did we talk about Twitter? Was that last week? Week before? We talked about
last week. It was the week before too.
Week before?
I was on that call. Yeah, I was on that one.
All right, week before we talked about Twitter. I've done nothing else with Twitter since I bought it on that day. But since then, since 2 weeks ago, it's gone up 20.27%. I've done nothing but make
What's the
100.
criteria for Schwab's grades?
Huh?
What's the criteria for their grades?
I don't know.
Those
But
analyst grades, man. I ain't
I,
pay attention.
I don't care about their grades. I got my own.
Right,
grades.
right.
Yeah. I don't know what their criteria is, but that F investment made me $176. And that same F investment on Boeing made me $321 at a 45% gain. That same F investment on American Airlines made me a 91% gain. So they can keep their scores. All right. The other thing I want to share with you is today. So last night, I was looking at earnings calls coming out, and I found Slack. And I don't know if some of you are using Slack at your own jobs, but I know we used to use Slack at my old job. My wife uses Slack at her job. I know a couple other people were using Slack. So I did my homework, and hopefully you did yours because you're going to be on the spot later on. I did my homework and looked at Slack Technologies investors page and was impressed. And so last night, Slack closed at $37 and some change. They had earnings after hours. In their earnings after hours, their revenue went up. Their earnings per share went up. Everything was positive for Slack. And their stock dropped $6 overnight. So when I woke up this morning, it went from $37. It was 31 something. I ended up getting it. I bought it twice. This is a dollar cost average number because I bought it twice. I ended up getting it the first time at 31 something, and then I got it at 32 something. Right? And so I literally just bought this today. I literally just bought it today. And in the 3 hours that I owned it, it went up 1.82% and made $43. So I'm sharing these particular things again, not to show off to you, but I'm really sharing it to show you that your money can work for you all the time. This increase happened within a day. That Twitter increase happened in a week and a half, right? That US Bank Core increase happened in a day, right? What I don't want you to pay attention to is how many shares I got, how much money I spent, because that could be intimidating. Remember, I refinanced my house, so I had a big chunk of money to be able to do those kind of things, right? What I want you to focus more on is, let's see, this don't give me the old price. So,
like the cost per share.
Huh?
Just focus on the cost per share. I mean, $34.
That's what I was going.
34.
That's what I was about to say. I bought Twitter for $28. That's what I want you to focus on. Twitter costs $28, and I know you got $28, right? And so that same 20% gain is the same on if you had bought one share, or if you had bought, 1,000 shares. The gain is the same. And what you want to see is you want to see those gains all day, every day. That makes sense. Any questions about this before we move on?
Hey, Omar, quick question.
Yes, sir.
I know y'all probably talked about this in one of the previous meetings. I just wanted to know if you could probably give me like 2 or 3 quick pointers. You had mentioned earlier doing the financial analysis on a particular stock. And so I was just trying to figure out what would be 2 or 3 quick things to review when doing the financial analysis on stock. I know you mentioned the 5-year stock trend. I was trying to figure out if there was anything else added to that.
I'm glad you asked, because Kendall's going to help answer that question for you.
I was just about to say, hey, I'll text you afterwards, but
No, you won't. You're going to answer right now. All right. So
okay.
What's the first thing we're going to do, Kendall?
All right, so you're going to expand the graph to 5 years.
So all this stuff, Mo, all this stuff that he's getting ready to say, write it down. Everything he says, write it down. Okay?
All right.
So the first thing you're going to do is do what now, Kendall?
So I would just extend the graph to about
what?
5 years.
To 5 years, right?
Yeah.
And so why are we doing that?
And you just want to look for a trend. So to see if it's gradually going up, like you said earlier, it's going to have some dips. But if it's a gradual trend upward, then that's a pretty good sign that the company's going well.
There you go. And if it looks like if it's been around for a while, we can extend it out to 10 years. It'll be a little more smooth, so we can see that. So that's our first indicator. If we see the graph is going down, we're not touching it. We're not even gonna do nothing else. We're just doing that first, okay? Right after we do that, what are we gonna do, Kendall?
Go to key data.
Yep, we're gonna go to key data, and we're on Seeking Alpha, by the way. Yep, so we're there. Now, I will say that with banks, the statements may look a little bit different. So the income statements it'll look different than say a Facebook or something like that. But the general idea, well, I'm gonna let you finish, Kendall. But I'm gonna ask Ronnie just to sum this up in one really quick sentence. What's the general idea of the things that we're paying attention to on these pages? In general, Ronnie, you gotta unmute yourself. Unmute yourself.
Oh, there we go. We basically looking at the bold stuff.
We're just looking at stuff in bold. Okay? So Mo, we just looking at stuff in bold. So we can pay attention to like the interest income on loans and the interest on deposits and total interest on borrowings. We could do all that. But at the end of the day, we really only care about the stuff that's in bold initially. And after we look at that stuff in bold, Ronnie, what are we hoping to see?
Basically, trends of upwardness. That's the word.
Trends of upward momentum, right? So Kendall was going to go ahead and dive in on this, which he's getting ready to do. What you going to do first, Kendall?
So I just look at what you said earlier was look at things in bold, but also I kind of remember what you said about the other numbers and kind of what they mean. So if you look at let's see, the total interest expense, for example, and you go over to, say, for example, December 2015, that's $1,401, right?
Are you here?
No, I'm in the total interest expense.
Oh, you're
right
there.
above.
Okay.
Oh, I just picked that one randomly just to make sense of the number.
Okay.
So that's
that would be 1 billion.
Billion. 1 billion. Okay.
1.4 billion. Yeah.
And at that point, I was saying that, you want trendward upward, but you're also kind of looking at whether they're staying the same just to make sure they're not losing money or.
Yeah. So I think you're heading in the right direction. So it's like the total interest, this is in bold, right, Mo? Yeah. So we basically see the income that they're making off of interest. Again, this is a bank, so their statement is going to look different than some other companies, right? But the idea is still the same. We watch the interest, the money that they're making from interest go from 12 billion. In 2016, it went to 13 billion. 2017, it went to 14 billion. 2018, it went to 16 billion. 2019, it went to 17 billion, right? Same thing here with the net interest income. Basically, anything in bold is the math of all these things added up. It's going to give you the bottom line, right? So, so now we got 11 billion here, another 11.6, 12.3, 12.9, 13 billion, 13 billion. And essentially, you're doing that on all of these things. You're doing the same thing with the revenue. You're watching that, what happens there, right? There are some things on these pages that we pay attention to that are not in bold. Kendall, you want to share one of those things that's on the supplemental items?
The payout ratio?
Payout ratio is good, but before we get there, we want to look at this EPS. And that EPS, Brad, you know what that EPS stands for?
I'm multitasking. Okay, EPS. Let's see here. Basic EPS. Nope, I probably would have stopped by now. I'm sorry.
Okay.
Because I saw the upward trends.
Yeah,
T-Mobile. I'm like, bam. Okay, that looks good. I'm gonna get one.
That's all good.
T-Mobile.
That's all good. James, what's that EPS stand for?
Earnings per share.
Earnings per share, right? So basically, we want to see this is the money that is coming for us, right? Earnings per share. So if I have, a share of the stock, how much am I getting, right? So 2015, that was $3.18. That went up to $3.25. That went up to $3.53. Went up to $4.15. Went up to $4.16. That supplemental information is not in bold, but it's important, right? It's important. Then after we've done, so if we looked at that income statement, we're feeling pretty good about that one. But there's 3 statements we got to look at. We got to look at the income statement, we got to look at the balance sheet, and we got to look at the cash flow, right? So now when we go over to this balance sheet, there's 3 sections of the balance sheet. There's cash from operations, which you see, again, this is going to be different because it's a bank. But it's going to be, well, it's not going to be here. But normally, you see cash from operations, cash from investments, and you would see cash from financing. The cash from investments and cash from financing typically are going to be in the negative because that's money that you're spending, right? But the cash from operations is going to be positive money that's coming in. And at the end of the day, what we want to know on this balance sheet is we want to have assets over liabilities. Assets over liabilities. And so the cheat code that we went over, you'll see assets here, you see liabilities here. The cheat code is we just go to the stockholders' equity right here, the stockholders' equity. This is total equity. That's the math. They've already done the math for us. And if this number is positive, that means they have more assets than they do liabilities, right? So we know that their assets in 2015 equated to $46.8 billion, and then went to 47.9, and then went to 49.6, and then went to 51.6, then went to 52.4, then went to 52.1. So those are all assets, positive money, right? And then
Hey, hold on. I wanted to say something to give the new guy's brain a chance to pause. I just woke up. You know, it's crazy. I just realized, and Godard's gonna laugh or say something. I just realized that's what they mean when they say that's the bottom line. They're talking about money. When you're looking at money and tabulated data, that's the bottom line. I just realized that. Go ahead. And that's what's important here. Sorry, go ahead.
There you go. So that's the bottom line, right? And so then on this cash flow statement, here's where we see the cash from operations, the cash from investing, and the cash from financing. We could look at all these things, and what a couple things that we look at here. Ronnie, what are a couple things we look at in the cash from financing section? You might be on mute, brother.
All right, I'm with you. Trying to make my screen bigger so I can be able to see your screen. All right, I'm with you.
So the cash from financing, what are the things that are not in bold that we're looking at there?
Not in bold.
This is me with the cursor circling over it.
Oh, how much debt they are accruing?
Yeah, so we want to know about the debt, right? The short-term debt issued and then the short-term debt paid. Because at the end of the day, Mo, if you don't have any debt, all you're doing is bringing in money, right? If you don't owe any money, all you're doing is making money, right? So we want to look a little bit at the debt. But at the end of the day, again, the bottom line is the net change in cash. That's doing all that math for you. And we will see that this is trending downward, which is not positive, right? So everything is not perfect here, right? But then on the flip side of that, when we look at free cash flow, that means I got extra money in my pocket, right? We're looking at that free cash flow looking like $4.84 per share, goes down to $2.95, starts to creep back up to $3.69, balloons back up to $6.30. So what we don't know is we want to always be able to do what? Compare apples to apples, right? So we might be seeing this with US Bank and be thinking to ourselves, like, I don't know if this is a good thing for me or not. But now you would want to compare them against their peers, right? And so on the same page, there's a peers section right here. And chances are when we see those peers, we're going to see some other banks, right? So we see the Bank of New York, PNC, Wells Fargo. And so we're going to want to compare those banks against each other. So hopefully you got that little quick synopsis. That's essentially what we've been going over the last couple of days.
I did. Thank you.
Yeah. So I want to go to TJ. I'm glad TJ brought this up. What TJ said is that he felt like he was just gambling, right? And so I found this website called Robin Track. Robin Track is a website where it gives information for what's happening on Robinhood, right? So people who are using Robinhood, which is, you know, a brokerage account, a way to trade stocks or what have you, it tells you what, and I will say that Robinhood is kind of more of a millennial, you know, new investor maybe in platform, and that a lot of retail investors, if you will, are using that platform. But on this page, it'll tell you the most popular stocks that people on Robinhood have been investing in recently. Here's the top 10. So I want to look at this real quick. At number 10 is Apple. So we bring Apple up. You'll see in pink the price. So here's Apple's price. That's been price changing, right? And you see when Apple took that dip in pink, when it started to go down, you notice that green line started to shoot up. And essentially that green line is the number of people who have been buying into it. So when people saw Apple stock go down, they jumped on it and started gobbling it up, right? So currently, of all the Robinhood users, there are 395 folks who are holding Apple. Now, if we were to do fundamental analysis on Apple, we know that Apple's a good company, right? So that makes sense. But there's some things on here that don't make sense. Let's start at the top. The number one. There you go. Look at Dar's finger. Number one. Number one. Anybody know what the F stands for? The F stands for Ford.
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 That's for F.
What? F.
Ford. Ford. So when the stock started going down in the toilet, a bunch of Robinhood investors just jumped on.
Sorry.
But why? Why? Probably because they was like, it's cheap.
Look at the price.
It's lower than its 52-week average. This is what TJ was talking about. This is where the gambling part comes in. Ford. So there are, let's go back real quick. There are 881,196 people that have invested in Ford.
Wow.
Okay? So Mo, here you are. You're about to be on. You got to put the hookah down for a minute. You're about to be on. So check this out. We're going to, real quick, what I just told you, you're about to do it. We're going to look at Ford real quick. And we're going to try to figure out why on God's green earth have almost 900,000 people decided to invest in Ford. What's the first thing we're going to do, Mo?
Look at the 5-year analysis.
That's what we're going to do. We're going to click on the 5-year, right? And what does that tell you?
Oh, man.
It's a downward slope.
It's a downward slope. It's been going down for the last 5 years. And what did I say when we first started? If you see a downward slope, do what? Nothing.
Hold.
Don't do nothing else. Don't do nothing else. If we wanted to extend this out even more, since 2014, this has been sliding downward since 2014. So we already know we don't want to do nothing else. But look at this, the earnings per share, negative $1.11. So people are expected to make $1.11. They're expected to lose $1.11 per share that they own.
And by the way, this is what you're doing before you buy anything. Before you do anything.
So why on earth, and like I said, we're not moving no further because we already know it's trash. Why on earth is it the number one holding on Robinhood? And the reason
Because it's cheap.
Because it's cheap and people don't know to do the fundamental analysis. That's what it is.
Same reason why cheap.
Don't know. My cousin bought it. He knows nothing about investing, and he just bought it.
Okay, so Ford is bad. Ford is bad. GE might in fact be worse. A bunch of people right around here, when it started really tanking, a bunch of people jumped on GE. We go here.
Go ahead.
You like just for fun.
This is crazy, man.
We go here. This is why I'm saying don't be listening to people. Listen to yourself. We click 5 year. Look at this.
And they want to buy that? Oh.
Why would you buy this?
It's the name you know.
Why would you buy this? There is no indication whatsoever that you should do anything on earth with this stock.
You don't have to even go to the financial sheets and the balance sheet. You ain't got to go no further. Just look at that.
This is trash. But yet,
now Cos and I may trade this very short.
Yeah, all right.
Today
against it.
But if I'm holding it, I know I'm holding this for anything. No.
But why would 789,000 people do that? And the reason for it is that they don't know what the hell they're doing. You know enough to, if you were to pull up this, you would go here and you wouldn't touch it no more.
You know what's funny about GE? Go back to that one that had the black background. That graph.
Robinhood, yeah. Or the Robin.
Go on the actual graph. Where that spike was, I was in it. I made money and I got out.
There you go. There you go.
The one little spike on there, I was in it.
Spike. This one right here?
Yep.
There you go. There you go.
I had a couple calls on G right there. Spiked and I got out.
There you go. There you go. So now, what we talked about in the first week, so just to catch y'all up, in the first week, I said sometimes you take a risk on certain companies, right? So personally, I took a risk on AMC Theaters. I bought AMC Theaters for $2. The analysis told me not to, but I bought it anyway, and I sold it for $5. And I got out quickly. Right? And now they're back in the toilet again. I don't know what they're at, but they're probably, I don't know what they're at. But I know they had a lot of bad news this week. I know that.
You're ready to go file bankruptcy. So.
Well, they're still at $5.91, so they still would have made some money. But
look at that EPS.
But that earning per share, there you go, negative $8.34. So why would you ever touch that? So there's a couple like real key indicators of like why I absolutely positively should not touch certain things, right? So you're going to want to do the fundamental analysis, and I will add, for those of you that just came in this week, please don't be intimidated. We've been doing this for a couple weeks. I guarantee you over time you're going to catch up and you're going to start to understand it more, right? So I'm about to do something that we have never done before, and I'm really excited about it because folks about to be on the spot to see if they did their homework like they were supposed to. Here's what was happening. Last week, I asked for you all to go to a stock investor relations page and do some analysis on that investor relations page. And so because there's 1, 2, there's 4, 12, there's 14 of us in here, it'd be really difficult to be able to have that conversation with all 14 of us. So I'm actually going to send you all to a breakout room. And you all are going to share with each other the investor relations page that you looked at, have a conversation about what you think about the stock, have a conversation about whether or not you're interested in buying it or not. If you did your homework, you should have no problem doing this. If you didn't do your homework, then now would be a good time to hurry up and figure it out. I'm about to put you in a room with some random brothers that you don't know, or my daughter, who you're going to be very nice to, and discuss your stock that you chose, okay? And the investor relations page that you chose. Those of you who are new to the room, don't worry, I'm going to make sure that you're in a room with people who are supposed to have done their homework, so you don't have to worry too much. So I'm going to take a second to put you in the breakout rooms, and I'll call you back when it's time. I'll give you about 15 minutes. But somebody in that room going to have to go to their investor relations page, and somebody in that room going to have to tell the truth if they did their homework. So if you haven't done your homework, in the time it takes me to set up, you might want to set yourself up now. Because we're not playing no games. So let's see. I'm going to do, there we go. I'm going to put, yeah. That one's good. That one's good. And that one's good. Okay. Now James want to leave. Talk about he'd be right back. All right, y'all. I'm about to send you to a breakout room. I don't care who does it, but somebody's going to have to share their investor relations page and talk about why they chose the stock, what they learned on that page, and have a conversation. I'm going to give about 15 minutes, and then I'm going to bring everybody back, and we can do, and somebody can choose somebody that did not share, to talk about what they learned. Okay? Everybody ready? Hope you did your homework. You should be getting the invitation. Go ahead and accept.
What up?
What's
going on, fellas?
It's at a bad man room.
Come on, you know what I heard it. So I wasn't on last week, so I didn't see what the homework was. So I'm looking at stuff now. Give me a second. So, we got more. What's up, brother Brian? All right, who's up?
Good evening. How's it going?
Good,
I'll go. It's fine.
I like that. All right, so share your screen, man, and
Okay.
should be able to, right? Yeah.
Yeah. Trying right now. Can you see the screen?
Yeah.
Okay.
And I'm gonna pause. I'm actually recording for. Let me pause this. Hey, Godard, don't forget to hit record.
Again,
It was just getting good.
Welcome back. So we're not done yet. So here's what's gonna happen now. Hopefully it sends you in the same breakout rooms. Hopefully. That I can't guarantee. I hope it does. But essentially what's gonna happen now, that person that presented, raise your hand if you presented. Okay, perfect. So the person that presented, if you guys did more than one stock investors page, that's fine too. But essentially, I'm gonna send you back to the breakout room for another 15-minute session. Except in this session, instead of going on the investor relations page, you're gonna go to Seeking Alpha, and you're gonna do the fundamental analysis. Now, there should be at least 4 of you in the room. So at minimum, one person can do the income statement, one person can do the cash flow, one person can do the balance sheet. And that way it'll give an opportunity for brothers who are new to the room to be able to hear directly from you how we look at these things, and more importantly, it gives you the opportunity to be able to stretch yourself and learn, which is the whole point of this. What I love about this breakout room is, you know, I've been doing a lot of the talking over the last couple of sessions, but now it gives you an opportunity to talk and be prepared. So everybody in here can do exactly what we talked about. Brothers that have been here from the beginning, be really supportive of other folks, even people who just came in today, be really supportive of other folks who are going through it. If they're like, man, I don't understand what I'm supposed to look at next, just help them out and bring them along so that they get it. So ideally, you're going to go to the same breakout rooms. It looks like you will. I'm going to give you another 15 minutes. If you want to use the exact same stock that you just looked at the investor relations page on, that's perfect. That's perfect. Relax, Brad. That's perfect. But just do it on Seeking Alpha now, right? And then you guys can have a little compare and contrast. But more importantly, catch folks who are new to the room, catch them up. And even folks that just got here, don't be shy. You can do one of those pages too. Okay?
Brother Wandera.
Yes, sir.
Hey, what are the components of the fundamental analysis? One more time, please.
I'm going to let the people in your room tell you because they should know.
Okay.
If they don't tell you, let me know.
Preston, we done told you. You messing us up.
He telling on us. Shiner, he's trying to get us in trouble.
They should tell you. I'll tell you when you come back.
Guess who's back? Back again.
What was the ticker for that one? Darden. What was
DRI.
DRI.
Oh yeah. We kind of just did that one a little bit. So
I know.
I can't remember what the label was.
Who's pulling it up? Are we doing or?
Yeah, that's fine. Thanks.
Gosh, I should still have it up here. Not too many windows open now. Hold on. Should be coming up shortly. You don't see it yet? Oh,
yeah, it's up.
Oh, I know why you couldn't see it because it's on my other screen. All right. Work.
That's up.
All right, we're looking at DRI. Trying to see if I'm still recording. I don't think I am. Let me double check.
Yeah, you're still recording.
You are.
No, it's not there. Hold on. It's gotta be up here. Hold on a second. Let me why I lost my let me unshare real quick and then there we go.
Break it back in one piece. So right before we get into what you did, I'm just curious about your thoughts on that on that process. What was it like to be in the breakout rooms? How did you feel about being in a smaller session? How did that work out for you?
Me? That was good.
Go ahead, President. You go first.
I thought it was great. I think this Zoom technology is great. In fact, I've been working from home since late February, and you know, I've been working to consult with people and stuff and try to share information and try to give a more personable experience and stuff. You know, ideal for the times. But
All right. James, what did you think about that?
I think the breakout rooms have kind of given you some encouragement as to what you have learned, and also gives you some motivation as to what you still need to learn.
There you go.
Yep.
All right. Go ahead, Brian.
Said Brian or Brad? Brad's gonna go. I'm gonna just go.
There you go.
I wasn't afraid to make a mistake.
There you go.
It was awesome. You know, we could just kind of like, no, you're on the right track. Okay, just go ahead back over here. Look, so it was more practical, you know, hands on a little bit. So it was.
You bought some more of that T-Mobile, man.
No. Hey, Bank of America. We looked at Bank of America, Citigroup, and what's the other one? What's the other one we had? Bank of America, Citigroup.
WPX.
No.
Wells Fargo.
Wells Fargo. So that was our little banking little thing. So that was cool.
Oh yeah.
Add Goldman Sachs to your list if you want to look at banks.
Oh, Goldman Sachs. We'll do.
Playing with the little boys, start playing some big boys.
Oh, Vic, what you think about that?
I think it was really good. I think it's a good opportunity for you to you know how you said last week that it's a lot easier to learn something when you're trying to teach it to somebody else. I think it's a good opportunity to do that because you help teach somebody else and also help yourself reinforce the knowledge that you already have.
Where's Big Mike at?
He's back home.
Back in Richmond, man.
Oh man, he can't be going home.
I hit him up, but he didn't answer. So maybe
All right.
next week.
You helping to tear down that Confederate statue.
Mike out there turning up.
Gotta get him turned out for the Confederate laws.
There you go. Mia, what you think about that?
I mean, I feel like a lot of people said what I was gonna say, how it was just a moment for you to teach other people, but also reflect on the things that you need to work on. Yeah, that's it.
Well, you're in a group of cool people. That's all I really want.
Very good, very good. So, so I'm curious from you, Mo. Did you get a chance to explain, or what did you do in that process?
So I primarily just listened to those who have been in this group before, and kind of I think it was good because it gave me a sense of allowing them to go through stocks that they may have looked at and giving their reasoning as to why, and then all of us kind of delving deeper into looking at the numbers that they saw and trying to come to the same conclusion as to what made them think that this may or may not be a good stock to invest in.
DJ?
It gave me a different perspective. I was, mentioning in our little break room that I'm not much of a fundamental analysis guy. I'm more of a technical analysis, and I'm more of a trader that deal with, time frames as small as a minute versus these years. So this is all new to me, looking at the other side of it. I did have one question that I didn't get to ask. It's just like, out of those thousands of stocks, what's the first step you take, like to choose a stock?
That is a perfect segue. That's a perfect segue. I'm glad you said that. You're working for the team right now. So yeah, that's the perfect segue because Cogna told me earlier this week that there's like 2,800, stocks in the total stock market in the United States, something like that. So there's zillions of them out there to choose from, right? The question then becomes, what are you choosing, right? And why, right? So the first answer to that question would be a couple weeks ago, what we were charged to do was we were supposed to look up stocks that we consume. So the things that you actually use, right? So you know, if I were to go through this list, this could be your starter pack list. If I were to say, you know, name a home improvement store, what would be first thing you said?
Home Depot.
Home Depot or Lowe's.
Or Lowe's.
Going there in the morning.
And that's probably be where you would stop, right? So that what that tells you is that those two companies right there have a moat, essentially. Like they run home improvement. Now there's plenty of others, maybe Osh or, you know, some other, I don't even know, your mom and pop shops. But for the most part, home improvement is coming through Home Depot and Lowe's, right? Those are stocks that you can invest in. Now here's the thing. You're not going to see some crazy growth from them, right? Because, you know, they're pretty established businesses, if you will. But that could be some safe investment. Then if I were to say, you know, name a beverage company, you know, what company would come to mind?
Coke.
Coke or
Pepsi.
Coke or Pepsi. Right? So you could do either one of those, and both of those are dividend plays, right? I'm just going through like really, really simple stuff. Now let's take it down even further. At your jobs, you probably either got a green bin or a blue bin, right? Meaning it's either waste management's coming picking up your trash, or public services are coming to pick up your trash. And guess what? Them businesses ain't going nowhere either, right? So you think about waste management companies aren't going anywhere. If I ask you about soup, you probably gonna come up with Campbell's, right? Like, so there's some I ask you about shoes, the first thing that's gonna come out your mouth is probably gonna be Nike, right? So those are all like really, really basic stocks. If I ask you about wireless providers or what have you, you'd probably say Verizon or AT&T, right? Would be the first things that come out of your mouth, right? So your first step is just like, what are the things that I know and I consume? Now the next level of that is maybe a little more nuanced. What are some of the things that I know about, but is more connected to what I do in my work, right? So one of the reasons why I looked into Slack technologies was because I knew that we use Slack in my last job. My wife is using Slack in her job, so that's why I looked into it, right? Your line of business might be a little bit different. It may be something that you guys use at work all the time. And I think we talked about, I forget what it was. It was like a payroll company or something like that. We talked about like last week.
ADP.
ADP? Yeah. Okay. So I didn't even know what that was. I had found it. I didn't know what it was. But then someone else in the group was like, yeah, we use that as our payroll. Right. So you start thinking about that. When you get past kind of all of that, what you're not going to do is you're not going to go to Robinhood, Slack, or whatever it was, whatever the page was, and use their opinions. Right. Well, you're not going to do that. But what you can do is actually what I'm getting ready to show you now, and I'm so glad you brought that up because that was literally the next thing on the list.
Can I add something real quick?
Sure.
I just realized, like, even what you're saying is talking to other investors, like, hey, yeah, I'm invested in this, and just having a conversation, and then you'll get ideas. But continue.
Yeah, even what literally just happened in your breakout rooms, right? I don't know. I know I heard Nike. I heard y'all talking about Nike. I saw Nike. I saw Estee Lauder. I saw y'all were looking at. I saw when y'all were looking at Bank of America, but then there was one or two of those I had never even heard of, right? Or even James when he brought up his gummy bear situation, which we got to tell him about in a minute, James, about the gummy bears. So that these kind of conversations that we're having on the weekly can be another leg and another opportunity to be looking at stocks. The theme for last week was Visa, because we knew that Visa was everywhere you wanted to be based upon the information that we found, right? And we had that conversation last week, right? So like having these conversations is another leg to it, but I want to give you kind of another step. So that was a really good question. So this website right here is called FinViz. It's a website where you can do screeners, right? So these screeners will literally, if you put in information, it'll spit out stocks for you, right? They also have the same thing inside of Thinkorswim. There's all kind of screeners all over the place, right? But it'll literally spit out stocks for you. So now, if I'm looking at all these things, exchange, market cap, PB, quick ratio, LTD, like I might get intimidated by that to be like, man, I don't know what all this stuff means, right? And you might not, and it may hamper you from being able to make a decision. Right now, we haven't put anything in. And so now it's spitting out 7,631 different tickers, right? So that's not really helpful for us. But if brothers remember, you guys know what I consider as the gold standard for stocks that I like. Anybody want to share that what my gold standard was that we used week 1?
EOO?
Facebook.
Yeah.
Facebook, because Facebook is crazy. Like if you look at the fundamentals on Facebook, it's crazy. So one way that I use Facebook as my barometer. I already know they're out of this world. So if I can find ways to compare the numbers that Facebook has with other companies that I've never heard of, let me take some of their information. So what we're getting ready to do on this stock ticker or this stock screener is this is FinViz. This is how we fill in the information. But on this page right here, all I can say, I gotta move all this stuff out of the way. How do I move y'all out of the way? All right, I think I'm good now. Wait, let me move this up here. Okay, so what I did basically, I just went to finviz.com, right? I just typed in Facebook, right? And then when I typed in Facebook, the ticker symbol for Facebook, it gives me some of the technical analysis that Cogs and Goddard and TJ like to look at. There's some technical analysis with candles and all that kind of stuff. We're not talking about that today. That's for a later day, one day. But the other good thing is that it's got all this information right here. So now if I start to go back and forth, right, I'll say, all right, I have no idea what to put in here for quick ratio. I don't even know what that is. Well, I can put my little cursor right there. It can give me a quick little sentence about what that is. And I still might not know what it is even after I read that, right? But what I can do is I can go to Facebook and I can look and see, oh, they have a quick ratio. And even though I don't know what it is, I know that it's 4.6. I know that. So now if I wanted to, I could go over here if that was important to me, which quite honestly it's not, but I'm just going to show you. I could go over here to quick ratio and I can say, all right, I know Facebook is at 4.6, so I want all stocks that have a quick ratio of over 4. So now that number went from 7,000 something to 657, right? Then I'm going to go back over here, and you guys know one of the things that I like about Facebook is their debt. They have none, right? So here's their zero debt. So maybe I want to find, okay, it says debt equity right here. I'll go back over here. I'm going to try to find debt equity. Here it goes right here. And I don't want high. I don't want low. I don't see exactly. So I want under 1, right? Maybe I want under 0.1, right? I put that in. Boom. It just broke it down a little bit more. Now, just to double check, what I should be able to do, I should be able to scroll through here real quick, and Facebook should still be on here. That's how I know if I made a mistake or not. And I'm going too far. All right, so there it is. It's still there, right? So I know that so far I'm filling this out right. So what else do I think is important? Well, I like return on assets. I like return on equity. I like return on investments. So let's just say I choose, and I also love gross profit margin. So their gross profit margin is at 81%. Chances are that number is going to be astronomical, but I'm going to try it anyway. So I'll go here to gross margin, and then I put a gross margin of over 80%. It goes from 498 to 52, right? So I like that. Again, let me just move this out of the way. I'm only going to do a couple more of these. Let's
There's
say
only 52 companies with greater than 80%
that have fit all the categories that I put in so far. Right?
Oh, yeah,
All
yeah,
of them, right? So then I want to say a profit margin of over 25%. So then I'll go and find profit margin, which is, where are you? Where's profit margin at?
It's like choosing a car that goes 150 miles an hour with bucket seats and leather with power windows and a radio.
Yeah. I can't find it right now, but long story short is you get the point, right? So if I were to choose one other thing I think is important, let's just say return on assets. Let's do that one. What was the return on assets? Return on assets is 16%. Return on assets 16%. So I want to have it over 15%. It's going to go from 52 to 12. Now I'm down to 12. Facebook is still there. But here's what's important. I got all these other companies that I've never heard of. I've never heard of any of these, with the exception of Facebook. It's the only one I heard of. But now what I can do is now I got a list. You understand what I'm saying? Now I got a list, and I can use that list based on what I love about Facebook, the pieces that I love about Facebook. I can use that list right there to then go into Seeking Alpha and do my fundamental analysis on those companies, right? So then if I realize that, man, this quick ratio thing, I don't even really know what that is. So I'm gonna just change that to any. I gained a couple more, right? Or if I said, you know what, this return on assets, I want to be actually a little bit higher than that. So I changed that. So I'm going to go from 27 to 9. Now I'm down to 9. And guess what? Facebook ain't even on that list no more. Right? So these companies right here, if I was to break this down really quick, essentially it would mean that these companies right here have over 25% return on assets, have no debt, and their gross profit margin is over 80%. And if that was what the things that were important to me, then I would have these companies to look at and I would just pop them in. So let's just do that real quick. CNS. Again, I've never heard of this in my life. Don't know anything about this company, right? But I'm gonna bring up this 5-year chart. We're gonna do this real fast. I see some like really kind of consolidated years of not really moving that much. And then something happened somewhere in 2019 where they really shot up and we're doing really well. And then what happened here? Coronavirus. Coronavirus killed it, right? So that tells me right there, like, all right, there's something here, right? I don't know what it is yet, but there's something here. So now I'm gonna go to key data, and again, I'm gonna do this real fast. And if I want to do it really, really, really fast, I'm gonna just go to overview, like super fast. I don't know if you guys did this when you were doing your analysis or not. But I'm gonna just go to overview real quick. Let me move this so I can see. And now in my overview, here's what I'm looking at. I'm looking at a gross profit margin of 51%, which I like. I'm looking at a return on assets of 25%, which I like. A return on equity of 42%, which I love, right? I'm looking at revenue growth of 10.9%, right? I'm looking at a gross profit margin of $217 million. I don't really know what that means because I haven't compared it to their peers, but I know that's what's there. Here's another important thing. I see that they have $57 million in cash and they got $40 million of debt. They could pay off all their debt and still have $17 million left over, right? That's where that Facebook like measuring stick came in to give me that because they have no debt, right? The other thing is I see that they have a dividend, that they're paying out dividends too, right? And they got a free cash flow of $134 million. I love all that, right? Then if I want to go and do it really quickly too, I go over to the peers and get some more information. They're compared against some of these other people, right? One of the things that I want to see is I want to see what their growth looks like. So I see their revenue growth year over year is 10.91%. As compared to the rest of their peers, This was at 2.12. This was at 4.18. This was at 16. They're looking pretty good in that area. If I'm scroll down a little bit more about profitability, I see their gross profit margin at 51%. Their peers are in that same kind of ballpark, so they're doing good things there. But their return on equity is much higher than their peers. Their return on assets is much higher than their peers. Their return on total capital is much higher than their peers. Their cash from operations, this one, they're losing money, so I would eliminate them off the bat, right? But I see that the cash from operations, this company over here is making a little bit of money. And then, you know what? What we love to look at is revenue per employee. And Godard, if you would take a second for those new people who are here to just explain what that revenue per employee means.
All right, guys. So real simple. This is how much you or each employee is worth to that company. So you make your $50,000, $100,000 a year, but to that organization, you represent $1.25 million of revenue. Right. So same thing for net income. So after you pay everything, you're worth $374,000. So I don't know how many employees they have, but multiply that times the number of employees, and that'll tell you how much money they're actually making. So basically, it's you make your 100,000, 80,000, 200,000. Yeah, you're still worth a lot more to the company than what they're paying you.
And so here's what's crazy. This is a small company. They only got 328 people working there, and they're so efficient at what they're doing that those 328 people are worth $1.25 million, right? And then I'm looking at their performance. If I held them for 3 months, they're at 1.78%. If I held them for a year, their price performance has gone up 40%. If I had them for 5 years, it's gone up 93%. As compared to their peers, they're outpacing their peers in that area by a lot, right? And then I can look at the dividend stuff here. And then we're looking at the returns. Look at these returns. 10-year return, 476%. How many of you would like a 476 return on your investment, right? As compared to only 87 here. And we had already eliminated them, I think, earlier, right? But this just gives me a lot of information right here, right? And then the balance sheet stuff is here. The income statement stuff is here. The cash flow statement is here. So this is even a more simplified version of what we looked at before. So again, I don't know anything about this company at all. But just in that little 2 seconds of fundamental analysis that we just did, like, shoot, I might be invested in them come Monday. You know what I'm saying? And that's because I did the analysis on them, and I didn't just guess, and I didn't listen to some random person, because most random people are not going to know anything about a CNS, right? And then if I really want to go even deeper, I do exactly what you guys just did. I go to the investor relations page, and I will learn, like, what are they doing, right? What are they doing, and what are they interested in? So long story short, you can really go through all of those steps that we talked about. You could go with like Home Depot, Coca-Cola, Pepsi. You could do that, right? Or you could listen to, folks who are just spitting off at the hip, like, man, get forward. You could do that and fail, right? Or, you know what? We need to invest in marijuana stocks. All right, why? Right? And my question would always be why, right? Now, if you can show me fundamentally that there's a reason why you're doing what you're doing, I'm down with it. But if you can't show me fundamentally why you're doing what you're doing, then don't do it. And the reason why you wouldn't do that is, even if we go back to that FinViz, initially we were talking about, 7,600 and some odd stocks to choose from, and that's just in the United States. I don't even count what's going on outside of the United States, right, that you can invest in too. So I say all this to say, like, we have some angles to be able to do the research that needs to be done in order to be able to figure out what kind of stocks we want to invest in, why we want to invest in them, and to do the fundamental analysis on them, if that makes sense. Did that answer your question? TJ?
Yeah, but then on a more simplified level, like you kind of have to be somewhat educated on just business in general to even know what those terms mean. Like on the FinBiz, you said I pick all the stuff that's what's important to me. What if you don't know what any of that stuff means? You know, even with the little description, you still have to go, do a little research to learn what those terms mean to the company.
Right.
But I mean, yeah, you answered it. You answered it.
Yeah, and that's actually the beauty of it all, right? So I always tell people in this day and age, we live in a Jeopardy world. You guys seen Jeopardy before? We live in a Jeopardy world where we got all the answers available to us, right? We just got to know the questions, right? And so you might say, all right, I'm gonna do this. I'm gonna do this in real life. And Godard just posted something that's important, so I'll talk about that in a second. But I might say, all right, like in real life, I have no idea what PEG stands for, right? I don't even know what that means. But I know the question to ask, which is, what is PEG? Right? So I'm literally going to go to Google, right? And I'm going to type in what is PEG? I guess it's a ratio, okay? I'll type that in. Price to earnings to growth ratio definition is right here on Investopedia, which is exactly what Godard just showed. I can click on that, and it's literally going to give me a whole page and a video of what it is. And it's going to tell me why it's important. So now I know what PEG stands for, right? So then my next step would be like, all right, I read it. I watched a little video. I still don't really understand. So again, we live in a Jeopardy world where now if we know the question, we got the answer. So I can say, what is PEG? And here I got some people, a bunch of people. I don't even know who they are, but I can get in the room with white people now. I can get in the room. I can get in the room with this guy or this lady.
The guy up top, I use them all the time.
And she'll explain to me, this looks like a class. So I'm gonna go and listen to the class.
So in today's video, we're going to take a look at the PEG ratio. For many investors, an improvement on a standard PE ratio and a great way to work out whether a share is cheap or expensive.
So man, if I stop right there, I just listened to 15 seconds. I just learned that the PEG ratio tells me whether or not a stock is cheap or expensive. I don't have to listen no more. You understand what I'm saying? So now
you can compare it to its peers. Yeah.
You can do all that, and now I can go back to this page, and I can see that Facebook's PEG ratio is 2.03. Let me just throw in another one. Just let's say let's do AT&T because we love AT&T. Let's go AT&T, and now I see the PEG is 6.88. What does that mean? Well, if I scroll over here, it says price to earnings to growth. That doesn't tell me a lot, but I can go back and watch that video and get a little bit more information to really understand what that means, right?
And can I say something real quick, Omar? That PEG ratio is a very specialized metric. Just always remember the stuff in bold on Seeking Alpha. That's important right there. The stuff in bold. So that's how you know what's important, and then that's where you start. You start with the really important stuff in bold on Seeking Alpha.
Right. So if I was to go back to that Seeking Alpha page that we just looked at for that same random stock that we just looked at, right, and go back to the to the key data, right, and on the financial statements, go to the income statement. I can literally do the following things. What is an income statement? I know what it is. I know what it says. I know the question to ask. And now I can listen to this guy or this random video or this guy, whoever I want to listen to, right? Once I listen to it and I get a general sense of that, then I'm like, all right, well, what's revenue? You know, what is revenue? All these answers are here, right? So now all these people are telling me stuff about what revenue is. And then I can say, is revenue important for stocks? And then I get somebody here in investing education that says, is revenue growth for your stock important? How to profit from stock market earnings, earnings per share explained. Long story short, I think you get the point. The point is that I can use the bold items to know the questions to ask, and I can also use that FinViz website if I wanted to get some information too. So not knowing what those things mean makes total sense because, you know, most of us don't have finance degrees. You know, most of us aren't doing this every day, so we wouldn't know those things. What we know in general is like, all right, man, they said just do the bold, so I'm just gonna do the bold, right? Which will work. Or once you get a little excited about it, you're like, you know what, let me dig a little bit more and let me learn and find out. And then what's gonna start to happen is the more videos you watch, you're gonna start hearing the same thing from different people. And you're starting to realize like, you know what? I think not only do I got it, I understand it from multiple different perspectives, right? And so now when I hear it in another conversation, I can apply what I already know to this conversation. So now when these people are talking what used to be French to me in finance, now I understand it because I know these different pieces, right? So
it's like going like on the technical side, it's going like, what's the EMA versus SMA versus the Fibonacci versus, you know, all the different indicators that we tend to use. So it's kind of that same thing. Like we had to go learn what that stuff was too, because it's not, you know, it looks like it's Greek until you start getting into it. You're like, oh, this is actually not that complicated.
Yeah. So yeah, man, I think we're gonna wrap up our class for the day and let Mickey get some sleep. I appreciate you, Mickey. Mickey is a soul.
I'm good.
Mickey is a soul. It's like, you know what? I had a rough day, but I'm coming.
Bro, we're remodeling these bathrooms, dude. It's been a week.
I'm not mad at you, brother. I appreciate you being here regardless.
It's been 2 weeks actually, tearing up demolition and everything.
Yeah. So what I'd like to end, what we always kind of end with, like, you know, folks being able to share what they got out of today, what they learned today, what they're excited about after today. Or if anybody has any, like there's a praise report out there. Somebody like, man, I just opened up an account today, or I opened up an account last week, or I just bought my first stock a couple weeks ago. Any of those things to share to kind of keep brothers' momentum going. And then I'll give you the homework after that. So, Cogs, I'll let you start first. Yeah, turn you're muted. You're muted. Unmute yourself.
Whoops, there we go. I should be clear now. Man, where do I even start? I know what PCG, what was it again? PG? Yeah, PG, and now I know what that means. Let's see, what else? Man, God, I can't remember. There was so many little things that I did learn. You know, even with my education, master's in finance, I learned a lot too.
All right, so we'll come back to you.
Come back to me. Come back
to you. Kendall, go ahead.
Oh.
Yeah, so FinViz. So I'm gonna use that to look at stocks. I haven't invested in anything new since last week, but just reinforcing what we went over last week and how to do the data analysis. That's really big, man, and I'm gonna hold on to that. So I got some ideas. So next week I'll probably have some stories about stocks that I invested in, but definitely a lot of insight today.
Nice. Brad?
Well, brothers, I turned 40 on Monday, so I'm buying some stuff.
There you go.
I'm buying something, baby. I looked at that Goldman Sachs, Big Brother Hurricane. That's too much. I'm going back to BOA. I'm going back to the corner bank. I don't know what no Goldman Sachs is. So yeah, no, it's just exciting. I like, this figuring this, the conversation. Definitely, the more you talk about it, you get more better versed with it. Just like, when we're going through the process, if I'm gonna be wrong, be confident and wrong, and then come back with, a better answer though. But I'm excited about being able to have different conversations with friends and family members, just getting their mind thinking in a different way. So that's where I am. I'm still excited, so.
All right, Jason.
I learned that Ford is trash, and don't listen to the people on Robin Track. No, I really love the Finviz site. That's pretty cool. The stock picker. I think that gives me some good ideas as well, because I've been trying to think about, maybe some deep sleepers or some things I'm not thinking about, and I think it's a good way to expand where your mind's at. So.
All right, TJ.
Like I mentioned, this side of it is a whole new world to me. I never really paid attention to the fundamentals. I always was looking at charts the whole time. So it's a good place to start. This is my first one. I know where to start. My little daughter trying to sneak in. This was very informational for me. I'm definitely gonna take.
Talk about getting her a custodial account so that she can do the same that my 8-year-old son did when we started.
You know what? It's funny when just now I was thinking, like, when she get older, she's only 4 now. Just starting to do the same thing. Never too young.
All right, Mickey.
I would say that looking at the stuff that we was looking at, and you was talking about Robinhood and Robintrack, it had me kind of reanalyzing the stuff that Robinhood gives for free. Like when you sign up, you get like a free stock and everything. And looking at it, like Ford, not Ford, but GE is like one of them. You know what I mean? So I was like, okay. So now it makes a little bit more sense why they're trying to give stuff away for free. They got people all excited about it, but really it's not, it's not that great. So that's one of the interesting things. The other thing I was gonna say was, like, if you have a link, Omar, like to, I don't know if you get a referral for like Charles Schwab account or anything like that. Like, can you put that out? Because I haven't opened mine yet, but I'm going to.
Yeah, I don't know about that, but I'll look. If I do, I'll look. I'll share it.
Yeah, okay. Just FYI on that one, guys. If you're a TD Ameritrade person like me, and Cogs and a couple other folks, so Charles Schwab is just about finished purchasing TD. So pretty soon there'll be no more TD Ameritrade. It'll all be Schwab, or I don't know if they'll keep the name, but they gobbled up TD away.
And to throw this out there, Charles Schwab has a ticker too.
Oh yeah.
And they just acquired another business. You know what I mean? So if you were like, well, what's another bank I can invest in, if you will? Charles Schwab is like $40.
Hey, check it out. In my company, for our stock that they give us, they're whatever I can't remember what it's called, but so it's all in Schwab. So I actually have a Schwab account. So y'all forcing me to use it, man.
There you go. You're getting bullied into it.
Yep.
Mia, unmute yourself.
I could have found the button. Yeah, I like the Finwiz account. I finally got my refund from Howard, so I can finally start investing again.
Oh man!
Make
sure your dad gets a cut.
About that. So I can probably start investing again, and I think using that website would be beneficial to me, so I could see other companies that I don't know about or think about.
All right, Victor, you want to go?
I was gonna say the Finviz site also, because I've been looking for stocks to buy recently, so that kind of made it a lot easier for me to like find something to compare to. Is but like to find like similar areas that I want in a stock. So
Yeah, and I'll reiterate too. I mean, kind of what TJ was alluding to earlier is once you get an understanding of what's important to you, like if debt to income ratio is important to you, or revenue is important to you, or earnings per share. Once you figure out those things that are important to you, that'll help you kind of like craft those screeners much better. I mean, I'm not great at it yet, but I know some of the things that I find are important to me, and so that's what I put in. So it's gonna help, but really do a deeper dive to like understand those things and why they're important. And everything is on YouTube or Investopedia. I mean, everything you can imagine is all there. So do all the research that you need to do. And like I said, I'm really big on the dividends thing, but there's different kinds of stock. Like we talked about previously, we didn't talk about so much today, but there are certain stocks you're gonna make money off of with dividends. We had this mind-blowing experience last week with AT&T, where if you bought AT&T in 1994, it cost you $48, and it's currently trading at $31, and you would have made 30% profit, even though you lost $18 per share, which was mind-blowing, but it's true because of dividends, right? So if you don't know much about that, maybe spend some time learning a little bit about that. Go ahead, James.
Yeah, so I think one of the things that I learned, even based on the homework and what we did tonight, was the benefit of being able to do some additional research using the investor page, because a lot of the things on Seeking Alpha, all of that stuff is just pulled from the different investor pages from different stocks. If you see something that's interesting on Seeking Alpha, but you want to know more details about it, you can go to the investor page and it should have more details to be able to give you maybe a more of a foundational understanding of why those numbers look the way they look, and maybe give you some more insight into whether or not it's something you want to invest in.
There you go. All right, Preston.
Man, I want to say everything that everybody else said. This has been a complete blessing. One of the things that I really love about your style of teaching is that you pretty much just lean on the fact of basically lean on how practical it is to to uncover the information, right, and to be able to identify a good pick. I like that a lot. Of course, I got to throw a shout out for the home team. I am a wealth management advisor with Merrill Lynch and Bank of America, and also the private bank of Bank of America. I use Merrill Edge for my account and for my daughter's account. And we have a lot of videos and a lot of stuff that's just consolidated on the same site. The things that the sites that you mentioned, though, I mean, in terms of FinViz and Seeking Alpha and so forth, give me something to kind of compare what we have to, just to kind of see, what I'm saying, just to get an idea of pretty much what we're working with, or if it would be better to use something else. But I mean, for the most part, man, my head is off to you and the rest of the brothers for taking the time to really go through this. It's going to help us all to build wealth for our families. So it's pretty awesome.
Yep, that's right. Mo?
It's funny because I just opened up a Robinhood account earlier today in preparation for this class, but I've kind of learned some good key principles to set as a foundation, and I'm eager to expand upon those to kind of help build my wealth portfolio.
Ron?
Yeah, I like the FinViz account, the website, but more importantly, if you look at the bottom of that page, it gives you some, it's like a one-stop shop for some of the news or the breaking news for all that stuff at the same site. So you don't necessarily have to believe everything you read, but it's just, it's stuff that's out there. So.
All right, Brian?
Well, first I want to start by saying thanks for the advice. I did open my daughter a custodial account, so please put money toward that soon once I get more familiar with the process. And also, thanks for the breakout room because it gave you reassurance, like when you're sleeping, and if you fall short, then someone can kind of pick up where you left off to kind of give you a better understanding of what it is you're trying to explain. So, and I appreciate that. So, and that's what I learned today.
James, did you go?
Brian did a nice job with the breakdown, man. I'm gonna say that.
Ronnie did?
Brian.
Brian did? Okay. Shout out to Brian. Man.
Oh, thank you.
Man, how long has it been? It ain't been but a month. Come on now. What's talking about?
Lots of good information, so.
Yeah, shout out to the teachers out there. I saw Kendall. I saw you do your thing too, Kendall. You know?
Appreciate it. You know, it's just piggybacking off of you, bro. Piggybacking off of you.
Yeah. And me, I saw you too. Youngest one in the room, teaching about Estee Lauder. So
Thanks.
major shout out. Major shout out. James, did you go? You did?
I did.
Okay, my order and I went by the order of the boxes and the boxes moved and I couldn't remember who went or who didn't. So yeah, man, major shout out. Oh, Kyle, you there you go. I had to come back to you. That's right. Go ahead.
Yeah. So I did learn about that dividend extra share. I know we talked about it earlier, but I actually got to see it. Like, I didn't even know, first of all, before 2 months ago, even I didn't know how dividends worked. I had no clue. I mean, but it's simple. You buy a stock, they give you a little bit of money for having the stock. It's that easy. That's a dividend. Oh, okay. I didn't even realize that. And then the fact that they give you dividends periodically, and when you click on that little box, whenever you buy stock, you can click on a box that said, would you like to reinvest dividends? Sure. Instead of getting like a $1 check back to you, just reinvest it, and they do it automatically behind the scenes. And when they do that, you effectively have an extra partial share, you know? And so when you get a dividend back, you get back the dividend amount plus a little bit more of the dividend of that partial share that they bought for you. I didn't realize that, and that compounds over time. And you can really make a lot of money after about 5 or 7 or 10 years. And then also, with stuff like this, oh man, I know one lady, she just told me last week on Wednesday, not the Wednesday before last, that she was just about to pay $2,000 to have a training or whatever. You shouldn't be paying that. I was mad. That was obscene. You don't have to pay all that money, $2,000, and there's no breakout rooms. It's just something you can find on YouTube. It's crazy. And then to answer someone's question, I forgot who brought it up, but to find out like what's important to you, like what you really want to see in a company, you'll discover that through conversation with other investors, you know, just talking, chit chat. And also while you self-study, because you got to do your own self-study, you know, through self-study of the stuff in bold, you know, the bottom line. And then you'll start to hear echoes of the same thing. Earnings per share, earnings per share, earnings per share. Everybody's talking about earnings per share. Wow, that must be important. So then you study it. Or gross profit. Really, that's important? Gross profit. And then boom, you'll be like, oh, okay, it's even in bold. So let me go ahead and look at a YouTube video. So that's what I learned in my little input.
There you go. So I just want to share this really quick, and then I'm going to end and give you guys the homework. So the other thing that's on FinViz, where's my little sharing thing? The other, I'm already sharing. The other thing that's on FinViz that's really cool, that I guess you guys can see. You guys see this? Can you see the FinViz website?
Yeah.
Okay.
I never knew how to read that. I still don't know how to read all that. I don't even know what I'm looking at.
I'll tell you really quick. So when you just go on the homepage, when you go on the homepage, there's this little like heat map over here. So this also kind of answers your question too, TJ. When you click on it, it gives you these sectors, right? So there's a technology sector. Everything in this box is in the technology sector, communication services sector, consumer cyclical sector. But then within that, it tells you the percentages that it's gone up or down. It also gives you the price when you like hover over it, right? So everything's in here. Microsoft went up 2.34%. Oracle's in there. Adobe's in there. VRSN, whatever that is, right? And so if you're like, man, I ain't got $187, but wait a minute, what is this NLOK? What is that, right? So now you can use this little heat map, and it changes. It's not the same every day, but you can use this little heat map to give you some stocks to look at, right? Semiconductors, the financial sector. You guys that was looking at the banks or whatever. Here goes a lot of financial sectors right here. There's your boys right there, Goldman Sachs at 217, a smooth $217.92, and it went up today, right? But if you're like, man, I like to fool with the banks, but I can't fool with none of those. They're too expensive. Just move the cursor up, and there goes some more banks for you, right? Right there, regional banks, right there for you. But so all that, and then you can even use these right here. So we talked about garbage earlier. Oh, that's Walmart. I thought that was waste management. I don't know where it's at, but you can use these little heat maps in red, in dark red, that tells you when the stock is going down considerably. So if you liked Charter Communications and you had that kind of dough on you, that could give you some indication. Let's just say if today was Thursday, like, man, I might want to go buy me some tomorrow because it just went down 1.72%, right? So you can use that first page on FinViz to help you be able to do that too, for some more ideas, if that makes sense. So I wanted to share that real quick before we jumped out of here. So next week, so first thing, TJ, Preston, and Mo, you got extra homework just like brothers that came last week had, so you got extra homework. Your first homework assignment, you have to go, if you're in the Facebook group, go in the Facebook group and do a post. Go on the Facebook groups and do a post about, your experience for today. Because the goal is we're trying to get as many brothers in here. Here's what's funny, like, we are literally speaking game like for five weeks straight. And we're talking about putting money in people's pockets. And don't get me wrong, I love having y'all in here, but it's also a little confusing as to why there's not more people learning, right? And maybe they already know, or maybe they don't have time. But whatever the case may be, we're trying to grow to be able to teach folks. So one way to be able to do that is to post on Facebook. So go on that Facebook page and just post about your experience. And then I have an extra little piece of assignment for you when you post. Tag somebody that you want to bring next week in your post. So when you post, say what you learned, what you got, what you experienced, and then tag somebody on that post. And if you can bring somebody next week, fantastic. Because I think, Mo, you can because Kendall invited you, right?
Yeah.
So that's how you got here. So that's what we want. Now you got to go do the same thing. Go reach down and bring somebody else. Next thing you know, your whole line end up in here, right? So do that. That's number one. And then the homework assignment for everybody, and then anybody else can do that too. Like, you don't have to not do it because you're not mandated to. But that's what that specific homework assignments for TJ and Mo and Preston. The other thing is next week I want to talk about REITs, which are R-E-I-T. We're going to talk about REITs. So one, if you don't know what that is, go learn about it. Go do some research on it, and then go and find one. Find one for us to talk about. And then we can do some analysis. I'm going to put you in those same breakout rooms next week, so you could do some analysis about your REIT, why you chose them. And I think one of the things that you're going to learn particularly is about those payout ratios as it relate to REITs. And I really want people to kind of be up on that, to kind of diversify their portfolio a little bit, or get some exposure to some other stuff. Because up until now, we've mostly been talking about, regular stocks that people know about. And I want you to go and do a little dive into REITs. So that's your homework assignment. Go find a REIT. Go find out what it is. Go find out what they mean. I'm going to post a video for you inside of Facebook. So you can do some research on REITs. And that will be your homework. And like I said, be prepared. Real quick, is this time still good for folks? Is the 9 o'clock time still good? That's okay. Okay.
Hey,
All right.
if you want to learn, they'll come, right?
All right. Yeah. There you go. So yeah, brothers, and brothers and sisters. That's the embarrassment face right there. My dad embarrasses me my whole life.
I do the same thing to him, so don't worry about it.
Yeah, there you go. That's our job.
That's our job.
You got one job, and that's to embarrass your children. If you have children and you haven't embarrassed your child today, you are not doing your job as a father. Yeah, let's do some REIT conversation next week. And then also next week, I've been holding this website back, but to me, it's the best website for stocks of all of them that I've seen.
Really? Even Seeking Alpha?
I think it has a different function, but to me, it's the best website. I've been holding it back because I don't want to overwhelm folks, but we're going to break that thing down next week too. I'm really excited about that. And sorry, James, I know I was supposed to come back to you about those gummy bears or whatever. James actually found the answer to the question, but I don't want to hold folks up. So if brothers want to log off, feel free to go ahead. James, we went over that crazy dividend ratio that didn't make any sense to us last time, but he now has the answer. So if brothers want to stick around for the answer to that question for free. Otherwise, you got your homework assignment if you want to do something.
Anybody want to do investing after dark?
Investing after dark.
Yeah, let's get it in.
After dark. So
that's the calculus version of this.
Yeah. Go ahead, James.
So real quick, it was just bothering me because it looked like everything else that we were doing research on, fundamental analysis, even some of the secondary analysis that we were doing for the JJSF, which is the parent company that sells Sour Patch Kids. My daughter was interested when I asked her. I was like, "You want to invest in anything?" She said that because she loves candy. And we looked at the dividends, and the dividend ratio was like 175%, which meant that they were paying 175% of their profit in dividends to the investor. And I'm like, at first, when I first saw it, I'm like, oh, that's cool. That it means that's extra money that you're getting back. But some of the more seasoned gurus on the Zoom let me know that that's not necessarily the best thing to see. So you might want to do some additional research to find out what the source of that is. And it took me a while to figure it out. It was just bothering me. So I continued to do more research. And I found out that the number that was posted in Seeking Alpha was the dividend ratio, payout ratio for just this quarter. Because if I look back at the previous quarters, the amount of dividend that was being paid out per share was the same. But because this quarter's net income was much lower because of COVID and all of that stuff, they were still paying out the same amount per share for dividends, but they didn't have the amount of net income that equated to what they had previously. So the percentage jumped up. So it does. If you look at it from that perspective, I realized in Seeking Alpha that while you can look at things from an annual perspective, you can also look at things quarterly. So I looked at the quarterly reports that are available in Seeking Alpha, as well as some of the quarterly reports that were available at the investor page. That kind of helped me understand that this was somewhat of an anomaly for this particular quarter. But if you looked at the previous quarters, it was like around between the 45 and 55% range for the dividend payout ratio. So that kind of gave me a little bit more of an encouragement to say, okay, look at it a little bit longer, see if it's something that you want to invest in, because everything else was upward trending. And I was like, everything else can't be upward trending. This payout ratio is this high. And if they're expecting something to just fall out of the bottom. So now I'm trying to do another assessment to see whether or not it's something I'm going to invest in. But that was pretty interesting.
Good research there.
Thank you, sir.
It's been going on for 3 weeks now.
Yeah, it was bothering me, man. I had to figure out what it was.
But the best part about that is, one, you were excited enough to, you only had to find out the answer last week, and we didn't quite have the answer, and you just kept on looking. Yeah. That's really exciting. And then two, even listening to you explain it, like when you first came into the room, you was like, I don't really know much about, you know what I mean? And now you breaking it down like you're a finance professor, you know what I'm saying? And so I take that as really encouraging for brothers, especially that just came in the room or whatever. Like you speaking a language already, and it's not like you've been doing this for a long time. Like you just started having this conversation, a few weeks ago.
I can attest to it, man. If I can just give a little publicity for the guys that are new, like I think the 3 hours or the 2.5 hours that you spent tonight have proven that these opportunities are well worth it, and that I agree with Omar that this room should be much fuller than what it is. But people have to want it for themselves. Like you can lead a horse to water, but you can't make them drink. But if you got friends, if you got bros that you can pull them along so they can get their first exposure and realize just how important this is, because we're not just building wealth for ourselves, we're hopefully building wealth for generations to come.
No doubt.
I have a quick question. So we've been talking about different brokerage firms and everything. In my conversations with people, as I talk to them about Robinhood and stocks, and just exposing them to the limited knowledge that I know. We came across Cash App. Cash App, you can buy partial shares. Is that what's the feeling of being able to buy like $25 of Facebook versus the whole however much it is, the whole.
Brad, you can buy partial sales on Robinhood too.
Oh, okay. I didn't know that.
If you will so indulge me for one quick second.
Mm-hmm.
I'd like to.
While Omar's looking for that, I also realized of some of the brokerage accounts, while they have apps like cell phone apps that are available to be able to manage your accounts, the cell phone apps don't have the full capacity of the accounts that you have when you access them from your laptop. Because I had a conversation with Omar, and I was looking for the ability to do a trailing stop trade, and I couldn't find it on my app. All it had was the stop, the market order, and the limit, but it didn't have the trail and stop available on my app. So I had to actually log into my computer, and I had the trail and stop available in my account there. So, if you don't see certain things in your apps that you've heard were available, log into the stuff, on your computers or your laptops, and you should see it.
Jay, what broker was that?
That was with Charles Schwab.
Yeah, so I'll say real quick. Number one, I shared my screen with you. This is my Charles Schwab. Charles Schwab is going to start. We have to click on the Learn More section. But Charles Schwab is going to start doing fractional shares if they aren't already doing it. But I know they're going to start doing it, for one. And then two, to answer the question, I heard something from Wall Street Trapper that to me made a lot of sense. And he was like, he said, I don't know if it was Robinhood or somebody else. It might have been Robinhood. But he said, if I can't call somebody and talk to them about my bread, I got a problem with that.
That was Wall Street Trapper.
That was Trapper?
I saw that one too. Yep.
Yeah. And so when he said that, I was like, that makes sense. If you can't call customer service and talk to somebody about what's going on, you got to send them an email and wait and hear back, that kind of thing. Like, to me, and I think what we're talking about when it comes to like the Robinhoods and some of these other ones, M1 financing and stuff like that, is we're really just talking about relative ease, right? And like they make it as easy as possible, but there's no benefit necessarily of going with one of those versus going with something that's more traditional, because they're all taking your money. You're all investing in the same thing, right? And just the difference is like maybe the fractional shares you can do versus what you can't do. It used to be that brokerages were fighting over fees, because they used to charge you a fee. Yeah, they used to charge you a fee to sell stocks. They don't do that no more. There used to be commissions, and that used to be the fight. But those things are out the window now. For now, we don't know how long that's going to last, but that's out the window now. So now, quite honestly, they're all created equal. And I think like, the Robinhood and M1 financings are leading towards like the, millennial folks or younger folks or newer investors and stuff like that, because it looks and feels really easy. It feels like, app-esque. But I got a Charles Schwab account on my app, and I bought my Slack last night on Charles Schwab on my phone. You know what I'm saying? I didn't even take my computer out. And then, I mean, I don't know what is on the Robinhoods or what have you in terms of like, I got you. In terms of like how to buy beyond market orders. But that ability to be able to do a limit order, to do a trailing stop and stop losses and all those kind of things, I don't know if those exist. But you're definitely going to want to be able to do that, because once you do get around to buying stocks, I was telling James earlier, once you do get around to buying stocks, I would not suggest that you ever buy a stock at a market order. Like never. I would never buy a stock at a market order, not once, right? Because there's opportunities for you to be able to save more money by either I would actually do it in reverse. I would do a trailing stop first. And if we don't know what trailing stops are, raise your hand and we can either talk about it now or we can talk about it next week. It's up to you. Would you like to hear about trailing stops now or next week? Now, raise your hand. Okay, next week? All right, next week it is. All right, so we'll talk about remind me because I might forget. We'll talk about trailing stops next week. But when you're buying stuff, don't buy it with a market order. That's the most expensive way you could possibly buy it is with a market.
Omar, are you saying trailing stops or stocks?
Trailing stop. It's trailing
stop. Okay.
That's how you buy a stock, with a trailing stop. It sounds confusing.
We were texting the other day and we were talking about Nike.
Yep.
And, those stop triggered right at the same time we were talking about it.
Yeah. Exactly. So we don't want to do market orders, because like I said, it's the most expensive way you could buy a stock. Unless you like, I need to get in right now and I ain't trying to mess around. Then there are moments. I did that today with Slack. I put a Slack trailing stop last night, and then this morning when I woke up and I saw it was still at the price, I was like, I'm about to just buy this now. I'm not messing around. So I did a market order for the rest. But for the most part, you should do a limit order, or you should do a trailing stop, and I would encourage a trailing stop over anything else. As Cogs would say, even if you did a trailing stop at a penny, you can still win.
Yeah.
But we'll talk about that next week.
Omar, let me also throw out there too about Robinhood. So I found out, so like if anybody has Robinhood, but they're looking to, like, maybe they've been thinking about transferring what they have from Robinhood to like a Charles Schwab or something like that, it costs $75 to take your stock out of Robinhood. You can bring whatever you want over to Robinhood for free, but if you're trying to remove it, it's $75. So, and I found that out doing my research on that this past week.
Yeah. Well, so what would happen if you just sold out of all your positions?
You can sell it. But if you wanted to, like, they had instructions for like actually transferring it to another brokerage. Okay. And that was the $75 fee.
You just get hit with those gains though, oh.
Yeah, well, if you've had it for less than a year and a day, yeah.
Yeah.
Yeah, but most brokers actually have a share transfer fee similar to that. Because they literally have to do the same thing that you would do, which is sell it and then buy it back.
Real quick, you said you were able to do a trailing stop from your app on your phone?
With Charles Schwab, no. I had to do. Okay. I forgot about that. No, I had to do. I had to do it on the computer because I tried to do it on my phone first and it didn't work.
Yeah, I was looking at after we talked today. I was looking for that.
No, on the Charles Schwab app, it won't let you do it on the phone. You got it, and you even when you go inside the actual site, you got to do the all-in-one sale type for it to come up. They try to hide that one from you. They don't like to make it readily available for some reason. But
right.
Definitely do a trailing stop. That's the winner chicken dinner. All right, anything else for investing after dark? Burning questions? All right, there it is. You know your homework.
Yes, sir.
Next week.
All right, gents and lady.
Hey, Godard, just do the same thing, man. Just upload it, and I'll get it out. Just after you do that.
Yeah.
You know what? You know what? Once you get it out, I'm gonna give another homework assignment. Share it with somebody. Send that video. Send the video to somebody on YouTube. It's on YouTube, right? So just.
Yeah. Right now I have it just set so we can see it, but I'll open it up so that everybody can see it. Yeah.
Yeah, or anyone who has the link or whatever.
When you say anybody, you talking about anybody in brothers or anybody in public?
Right now, it's just set so that only the people with the link, which is
Right,
just
yeah,
in the group.
Yeah.
So,
So I would say once cats get the link, to be able to share the link with someone, another brother, so that they can catch up.
Okay.
See the videos. All right, y'all.
All right.
Great. See you again next week.
All right,
guys.
Start.
All right, thank you.
Let me stop.